Hey, good morning, Frank. Yeah, Badu. I mean, obviously it's very inexpensive. Its core e-commerce search business, really ad revenue, has really contracted because of the issues that Eunice articulated, the knock-on effects of the housing crisis on consumer confidence and domestic consumption has weighed on advertisers, including Badu. At the same time, its AI-driven cloud business is up to 20% of revenue. Is accelerating very quickly. I think it grew about 27% year over year in Q2. So Badu, like many stocks, there's pros and cons to them, and it's highly biased. Why we prefer a diversified basket approach.
Well, at least you're admitting you're biased there, Brendan. John, I'm going to come
sure.
over to you. What's your view on Baidu in particular? I know we're talking about the broader Chinese tech sector, but on this one name that we have Kathy Wood investing in, what's your take?
Yeah, I mean, I think their ChatGPT version is called Ernie, and Ernie's getting extremely good marks. It's now passing, a lot of the DeepSeek models that used to be the big story, 6, 10, 12 months ago. So Baidu certainly is one of the players, one of the national champions that's going to emerge from the AI stack in China. So I think it's getting to be a must-have stock, and it's kind of following on the momentum of a lot of the other stocks like Baba that have played out pretty well for investors for like a year now. So the move into Baidu is also signaling that there's going to be a broadening of interest, beyond the tentpole names to the smaller names like Baidu.
But do you think that broadening is justified, John? Because we're bringing you on because you're the bearish one when it comes to the Chinese tech sector. Do you think it's warranted, and you think investors are going to be rewarded for putting money in the Chinese tech sector at this point, still with the overhang of the China-U.S. trade tensions?
Well, to be honest, we have a number 5 ranked strong sell rating on Baba. And if Baidu is going to just be a seen one, seen them all, it's going to follow Baba. And what you learn from Baba is that Baba put in a high in the 190s back in late September. And typically in this momentum run for Baba, it sells off and it can go down 30, 40%, Frank, for the next 6 months before it starts to turn around. So right now, with all the tensions in the news, with the high that was put in just a few weeks ago, it's a really poor time to be investing in Chinese stocks from a tactical perspective. So I would be, listening to the news and being long-term bullish, but short-term, you have to be bearish for multiple months because of all the headwinds.
All right, so John, you're painting Alibaba, which tickers Baba, of course, as kind of a bellwether for the Chinese tech sector. Brendan, I want to come over to you. Do you agree with that take? One of John's points is that the EPS growth for Baba has been relatively flat over the last couple of years. Is that an issue for Chinese tech more broadly, Brendan? And if it is, how should investors view that?
Yeah. I mean, listen. The Chinese economy is in okay shape. It's not great. It's not terrible. That's reflected in the balance sheets and net income statements. These stocks do not trade on fundamentals. They just don't. I mean, 100%, they do not trade on fundamentals. It's all about the geopolitical and the media narrative, which has been exceedingly negative. Professional mutual fund managers are all significantly underweight China. U.S. institutional investors hold no China whatsoever. And if you have a Xi-Trump summit at APAC next week, literally next week, potentially leading to a Trump visit to China Q1, that really significantly eliminates this geopolitical headwind, which will allow professional investors in the U.S. to come back into space. I would say, Frank, investors outside of the U.S. are not affected by this. So if you look at flows into China from Europe, from Asia, money is piling in, and it's just the U.S. institutions are going to be the last person back. So they can stay on the sidelines, but they're going to be forced back in because this bull market's been going on for more than a year and a half.
All right. Well, Brendan, some other news out of China. We have the CCP's fourth plenum. It goes from today through Thursday, expecting to lay out their 5-year plan. Yep. Now, according to you, as part of this meeting, China's going to look to strengthen its tech sector among some other issues when it comes to monetary policy and things like that. Who's the biggest beneficiary of this in the Chinese tech sector?
Yeah, 100%, leading in some of the releases going into the release of the draft of the 15th 5-year plan. It's all about science and technology. It's about technology independence. The U.S. is becoming an unreliable partner, and so they're going to do it on their own. So companies like Baidu, like Alibaba, because of their data, because of their cloud computing, because of AI, are significant beneficiaries. And additionally, you look at some of the companies in mainland China, some of the semiconductor stocks like Cambercon. These are significant beneficiaries. But I do think, Frank, the most important thing is the geopolitical. President Trump goes to China, does a deal with Xi, it really, really is going to change the media as well as the geopolitical narrative, because no one controls the Republican Party like Donald Trump. And if he says we're doing a deal with China, people have to fall in line.